So, are we in a housing bubble? Well, when you start hearing that houses are going for $100,000 over ask, it's natural to start asking whether or not we're actually in a housing bubble and will that bubble burst. So, let's see what the experts say. Well, one of Canada's top economists, David Rosenberg, seems to think so. Rosenberg argued this week that rising Canadian home prices is driven largely by record low interest rates and that it's going to continue for some time. Banks seem to be following suit. Scotiabank noted that the federal government might attempt to play catch up to the housing boom by including some macroprudential measures in the upcoming budget containing housing prices. This was echoed by BMO economist Robert Kavchik. Kavchik argued that not only are we going to see a bubble, that we are already there. So, what's the Bank of Canada think about this? Deputy Governor Lawrence Shembry noted that one has to recognize what happened in 2020 in the housing market was unusual in the sense that there was a period where the housing market was effectively shut down. Since 2020, where people were shut out of the housing market, all that demand is getting released right now. So, are we in a housing bubble? Well, according to Scotia, yes, and we might see something forthcoming in the next Canadian budget as to how to cool down the market. According to BMO, yes. And rather than talking about whether or not we're in one, we should accept it and figure out how to cool the housing market. According to the Bank of Canada, we're not sure. They're taking a wait and see approach, figuring that we'll continue to look at the data. And if trends continue, then maybe they'll think about raising rates, working on the stress test, figuring out different ways to sort of cool the housing market from what it's doing now. My own view is that it's sort of a mixture between the two. Yes, there is a lot of pent-up demand from 2020, and yes, mortgage rates are encouraging higher borrowing. With that said, the stress test hasn't changed that much, if at all, since COVID hit in 2020. So people's borrowing power is largely the same. Whether or not pent-up cash savings has anything to do with the housing bubble, that may be increasing people's down payment, but their affordability remains largely similar to what it was prior to the pandemic and prior to the decrease in mortgage rates. Well, the 5-year fixed rate may have gone down. The stress test hasn't really changed. So these lower mortgage rates, although they're helping with business for lower borrowing costs, they're not necessarily helping with affordability when people get pre-approved for a mortgage. We still have to qualify by the Bank of Canada guidelines, which at the filming of this video is 4.79 amortized over 25 years with anything less than 20% down. So I don't really see how that could have changed that much over the past year to cause this much of a bubble. In London, Ontario specifically, which is where I'm located, we've had a growing demand issue for years, since 2016. As more and more boomers from Toronto retire and sell their houses in the GTA and move here, that creates excess demand that we weren't really prepared for. So that's not really a rate issue. And it's not really a pent-up demand issue from people being locked out of the housing market. It's something completely different. With that said, we've never seen $100,000 over ask prices. So like I said, it is a mixture of the two, whether or not we're in a housing bubble. We'll find out as the spring market starts and as offers continue to come in and we see the average purchasing price. We'll find out if we're in a bubble sooner rather than later, probably.